Hey everyone, and welcome back to the channel. Today, we're diving deep into something that affects every single one of us, the 2026 Union Budget. I know, budgets can sound a bit dry, but I promise to break it down in a way that's easy to understand and, more importantly, explain what it actually means for your wallet. We'll look at the good, the bad, and how you can navigate the changes to make your money work harder for you. So, grab a coffee, get comfortable, and let's get into it. First up, let's talk about the big picture. The government has laid out its economic roadmap for the next year, and there are some major themes. We're seeing a huge push towards infrastructure development, which is great news for the economy in the long run. Think more roads, bridges, and digital connectivity. They're also focusing heavily on boosting domestic manufacturing and creating jobs, which is always a welcome sign. But what does this mean for you and me on a day-to-day basis? Let's start with the pros. The most talked about highlight is the change in the personal income tax slabs. For many middle-income earners, there's a bit of relief. The government has adjusted the tax brackets, meaning you might see a little more cash in your monthly paycheck. Specifically, the basic exemption limit has been slightly increased, and the tax rates for certain income levels have been tweaked. We'll pull up a chart on screen in a moment to show you exactly how this might affect you based on your earnings. This move is designed to increase disposable income, hoping that we'll spend more and give the economy a little boost. Another positive is the increased deduction for health insurance premiums under Section 80D. Health costs are rising, and this is a clear signal from the government encouraging people to get adequate health coverage. It's a win-win. You get better financial protection against medical emergencies, and you save some money on your taxes. They've also introduced new incentives for first-time home buyers, making it slightly easier to get on the property ladder. If you've been saving up for that down payment, this could be the little push you needed. Now, let's move on to the not-so-good news, because no budget is ever perfect. One of the biggest cons is the increase in indirect taxes on several consumer goods, especially electronics and imported items. The government's Make in India push means they want to make imported products more expensive to encourage us to buy local. So, if you've been eyeing that new smartphone or laptop from an international brand, you might find it costs a bit more now. This will likely lead to a slight increase in the cost of living, at least in the short term. Furthermore, for all the investors out there, there have been some changes to the capital gains tax structure. The holding period for certain assets to qualify for long-term capital gains has been adjusted. This could impact your investment strategy, especially if you're involved in the stock market or real estate. It's as crucial to understand these new rules to avoid any unexpected tax bills when you decide to sell your investments. We'll do a separate, more detailed video on just the investment-related changes, so make sure you're subscribed for that. So, how does all of this come together and impact your personal finances? Let's connect the dots. The tax relief might give you a few extra thousand rupees a year. What should you do with it? My advice is not to just let it get absorbed into your daily spending. This is a perfect opportunity to boost your savings or investments. You could increase your monthly SIP, top up your emergency fund, or use it to pay down some high-interest debt. Think of it as a bonus you can use to fast-track your financial goals. On the flip side, you need to be mindful of the rising costs. Create a budget and track your expenses to see where your money is going. You might need to adjust your spending habits, perhaps by cutting back on non-essential imported goods or looking for domestic alternatives. The key is to be proactive. Don't wait for your bank statement to give you a shock at the end of the month. Being aware of these price hikes allows you to plan ahead. For homeowners and potential buyers, the new incentives are great, but you still need to do your due diligence. Don't rush into a purchase just because of a tax break. Ensure the property is right for you and that the loan is affordable in the long run. For renters, unfortunately, there isn't much direct relief in this budget, so your focus should be on maximizing savings in other areas. Let's also touch upon the broader economic impact. The massive spending on infrastructure is a long-term play. While we won't see the benefits overnight, it's expected to create jobs and stimulate economic growth over the next few years. This could lead to better job opportunities and potentially higher salaries down the line. So, even if the immediate benefits seem small, the ripple effects could be significant. What are the key takeaways then? First, understand your new tax liability. Use an online tax calculator to figure out exactly how much you'll save or if your tax bill will change. Second, review your budget. Factor in the potential increase in the cost of certain goods and services. Third, reassess your investment strategy. Talk to a financial advisor if you're unsure how the new capital gains rules affect your portfolio. Don't make any rash decisions. The 2026 Union Budget is a mixed bag, as they often are. There are definite positives, like the income tax relief and health insurance benefits, but they are balanced by the negatives of increased costs on certain items and changes for investors. The ultimate impact on your financial health depends entirely on how you respond to these changes. Being informed is your greatest asset. By understanding the pros and cons, you can make smart, strategic decisions that not only protect your finances, but also help you grow your wealth in the new financial year. That's our detailed breakdown of the 2026 budget. I hope this was helpful and gave you a clear picture of what to expect. What are your thoughts on the budget? Do you think it's a step in the right direction? Let me know in the comments below. I read every single one, and I'd love to hear your perspective. If you found this video valuable, please give it a thumbs up and share it with someone who might need to see it. And do not forget to subscribe and hit that notification bell so you don't want to miss our future videos. Thanks for watching, and I'll see you in the next one.